This is Omar Nashashibi in Washington, D.C., with the results on the U.S.-China Phase I deal agreed to by the previous administration. In a study released on February 8th by the Peterson Institute for International Economics, researchers found that China had only purchased 57% of the $200 billion worth of U.S. goods and services Beijing committed to buy in the 2020 and 2021 under a deal reached by former President Trump. The Trump administration in January 2020 signed the Phase I agreement with China that resulted in the U.S. not applying additional tariffs on Chinese imports in exchange for the increased purchase of U.S. manufactured goods, agricultural products, energy, and American services. While many were skeptical at the time that China had the capacity to increase their purchases and actually come through on the agreement, but the deal did mark an important de-escalation between Beijing and Washington at a time of heightened tensions. In addition to the purchases, the agreement called on China to remove technical barriers to U.S. farm exports, respect intellectual property, and allow more access to its financial services sector for American companies. Many factors played into the lower U.S. exports to China, including obviously the COVID pandemic, but also problems with Boeing aircrafts. But the 59% of manufactured goods purchased under the commitment over 2 years falls far short of what was discussed a few years ago. Starting with the initiation of the trade wars in 2018, U.S. manufacturers began to experience a 25% and 7.5% tariffs that are still in effect today on thousands of Chinese imports. In response, China imposed retaliatory tariffs of its own on American exports. On both sides, disruptions throughout the supply chains continue to this day, but we do have some level of certainty. We do not expect the Biden administration to fully lift the tariffs on Chinese products anytime soon, meaning the 25% and 7.5% tariffs are likely to remain for the foreseeable future. On the purchase agreement, we did see COVID-19 related products such as medical devices exceed their target by 134%, as did semiconductor purchases by 129%. However, the other side of this are autos, trucks, and parts that only reached 39% of the commitment amount. In addition, U.S. aircraft and part sales to China reached only 18%, though much of that is related to the challenges at Boeing I previously mentioned. China was never really on track to hit their target purchases, and that was evident even after the first year. And the Biden administration, upon taking office, said it was not going to pursue a Phase II follow-up deal to that agreement. The U.S. Trade Representative Catherine Tai recently said they want to hold Beijing accountable for the purchases commitments under Phase I agreement, but it is unclear how the Biden administration could force China to do so. In its annual report to Congress released just February 16th, about compliance with WTO rules in China, USTR said that the United States has fundamental concerns with how the Chinese government continues to subsidize their manufacturing industry, including with, quote, massive financial resources. China joined the WTO in 2001, and USTR Catherine Tai said that China did not move to embrace the market-oriented principles on which the WTO and its rules are based, and they have not made the progress to live up to those commitments. This has long been a complaint of many U.S. manufacturers and certainly Midwest politicians. USTR Tai did say that the U.S. government needs additional tools to counter China, but did not detail what those tools might be or how they would use them to counter Beijing within the context of the current established WTO trade rules. The dual reports on Chinese purchases and WTO compliance will only embolden lawmakers on Capitol Hill who are negotiating a final bill to counter China and strengthen domestic manufacturing. A version of the legislation has passed both the House and the Senate, leading to the current negotiations between the two chambers that is ongoing and likely in its final stages in weeks. The final measure will likely include at least $50 billion to incentivize semiconductor manufacturing in the United States, efforts to streamline domestic supply chains, and invest in STEM education and workforce training, among other areas of agreement that are already in both packages that are together in the House and Senate. We do expect Congress to attempt to send a final bill to President Biden for his signature by Memorial Day, and the United States says it's still interested in continuing talks with Beijing on the relationship moving forward and how they can best coexist. In the interim, and as expected, we're likely looking at the status quo with tariffs still imposed all around and China to continue business as usual when it comes to its industrial supportive industry that the U.S. has objected to and cited in that WTO compliance report released on the 16th. What is clear is that we are going to continue to see tariffs, continue to see tensions, but the new data gives us a little bit insight into those purchase agreements and the amount of exports from U.S. manufacturers that went over into China as it relates to the prior commitments struck in 2020. That is the latest on China trade wars from here in Washington, D.C. We will continue to keep you posted, especially as the legislation moves through Capitol Hill.